Good evening. Today's September the 12th. It's Thursday. We had PPI this morning. Um, Yesterday was CPI, so we're getting a lot closer to the FOMC decision on the 18th. As far as PPI is concerned today, we were, again, expecting that we could have pretty good ranges after PPI. We could have a pretty strong reaction, especially given how weak the structure was yesterday. But very similar to yesterday, we didn't get anything. CPI overnight after the release was before the open, low liquidity, but still just didn't really move the market at all until the open. PPI today, so the numbers were a little bit cool. Year over year, they were a little bit hotter month over month, but nothing drastic. Jobless claims were also at 8:30 Eastern, pretty much in line, so no big surprise there. There was an article out from Tim Maris, Wall Street Journal guy, talking about the rate cuts moving forward. Maybe the market's a little more concerned about how many rate cuts, not what the rate cuts are going to actually be. But after CPI yesterday, the probability of or the bets on a 50 basis point rate cut dropped quite a bit, from like 45% down to 20, I believe. And after PPI, they increased a little bit more to a 50 basis point cut. So market shifting a little more towards a deeper cut after today. But that's not really what's important here. Not in this video. We're not macro traders. We're not on CNBC. So it's part of our trading plan today. Highlighted this, bolded it out to bring attention to it, that our goal today is to watch price after the open to see, are buyers going to step in at these higher prices after that extended move up, or was that just short covering yesterday? And if there's a lack of buyers, we could see the bottom fall out and potentially move all the way back down to balance. So if we look, we've been we had this large balance area. Once we broke from that, we've been short biased, right? It's pretty emotional trading. Then we started moving higher. So we break from balance, which is this line right here, which was the main area we were watching today, these two. And so we moved down, market short. We're in negative gamma down here, which is also right in this area, coincidentally. Then after CPI, we open up, and then we see some liquidation. And I think this was maybe a little bit of an overreaction. Judging in hindsight, it looks like it was an overreaction. And they came right down to this level, which is where we were looking for them to come in. Played out very well in yesterday's plan. But the point being, after 60-point move down from where we were looking at where sellers would step in, then they shot this market right back up 155 points. Huge move. So it's very important coming into this and say, what was that move for? Was that really buying, or was that shorts? And when you look at the structure, a little reactive there. The structure was very weak yesterday. There was just no really good pullbacks. It was a very strong, maybe one of the strongest trend days I've ever seen, with the exception, I guess, of the first three periods. But so there weren't really any good lines in the sand to look for buyers, except for this area down here, this 5,500 SPX area. And so we kind of had to be patient as this day developed. Talk about that here. 5806, 58, 5506 is our line in the sand for buyers. We have previous structure and more from yesterday confirming interest. 5580 is also a key level we're watching. This is a previous balance low. Acceptance above could find more buying support. We could see balance or rotation into the close if we reject this area. So if we look at what happened as this day played out, I hope I'm not making people sick by zooming like that, but so this is where we close. And very strong close as far as the move, but a very weak close as far as no structure here. It just shot right up into this level. And then we opened up right at the same level. It's not really much change from overnight or from the releases. And so we were monitoring this to see if buyers would show in and defend this. And so we can see this green dot right here is the open. We couldn't really stay above the open. And, we're looking at this live in the room. That's what we were pointing out. We couldn't really stay above the open. Then we ended up taking the overnight low. So that's two, one for not being able to hold the open. Two, couldn't hold the overnight low for the bears. But then we put in a pretty decent excess. At one time frame up. So now it's even. Two for the bulls, two for the bears. One time frame up, one time frame up. So the ball is pretty firmly in the bulls camp. But we're still just kind of, bouncing out around the close yesterday, rotating around this area. And so a couple hours into the day, we pointed out, put it on Twitter. I was pointing this stuff out not to brag about it, but to help people go through and understand our thinking process and how we're doing this. We're looking at that the market was just kind of going sideways, and if they weren't able to squeeze this market above this area, that we had a good chance of liquidation and stopping these people out. A little easier to see that on this chart. So this is our overnight session right here. This is the level 5580 level that we were watching. Just kept testing it. But if they weren't able to squeeze this higher, looking at running stops, and that could cause a domino effect and potentially go to the bottom of balance again. But they do squeeze it, and they squeeze it 30 points higher and end up pulling right back to this level. So that's kind of what I want to talk about here, just to go in a little bit of detail about some things. This balance area, very key concept. And the reason why is because you have, we trade in this area for, I think it was 10 days. So 2 weeks we're trading in this tight range. You have buyers defending the lows, sellers defending the highs, but nobody's really coming in with enough size to push this out of this range. Well, now we're right back in that range. And you can see this is what we talk about happening, that we look for it to reject it. Just like the supplier, it's the same, pretty much for the same reasons, because that liquidity there and the people that are left potentially holding the bag and so on. And so we finally do break above that area and we come right back to it and test it, right? So now that we're inside this balance area, we're looking for this to hold and for us to travel to the top of balance. Very similar to this. We go to high balance, low to balance, high balance, low balance, high, low. So we could potentially see the same thing here, but this becomes a target now. And this becomes an area to potentially reload. Or if you want to be short, then the other way around, right? So just to kind of reiterate, the key concepts for today was, are buyers going to defend? Are buyers going to show up at higher prices when we haven't been seeing them at lower prices? I think we can check that off and say that they did. We do have weak structure below us, but now we have a little more solid structure, up here. So that's a good thing. Now we're back into balance area where the map becomes a little bit different. Now we're not so focused on a put wall. Now we have another area of the map to focus on. We're going to keep trading inside of this area. That's something to look forward to. So we have buyers showing up. Shorts got their face ripped off. So doesn't mean that they're not going to show up. We have, pretty big move on the 18th next week with FOMC. I don't think we have much else before then. This is our calendar, consumer sentiment, manufacturing, red book. We have the 20-year auction, which the 30-year auction was pretty decent today. I think the bid to cover was pretty good, but the tail was a little bigger than average, a little less than previous, if I remember those correctly. Mortgage rate, so then the FOMC on Wednesday. So not much until then. 20-year note auction maybe, but I don't think that's likely with good 30-year and 10-year auction this week. But that's where we sit. So going into tomorrow, if nothing drastic happens overnight, then we're looking for continuation on this. We have a pretty good area to lean on here. Another thing to note too, I missed this, or almost missed this, I should say. This is an extremely poor low right here. So we have 1, 2, 3 periods all within 1 tick of each other. So 1 tick market profile chart. We had another period that tried to test this too. So extremely poor low right here. We have a pretty good supportive area right here. We even kind of have a pullback area so far right now. Like you see, overnight's respecting that. So we have some areas to lean on for longs now, which we haven't had. And we talk about poor lows. We're looking at this poor low, and Dalton, for example, talks about this being nuanced, right? And in this scenario, I think what this poor low is telling us, the market is too long. So we moved up, what is this? 200 points off of the lows in 2 days. So I think it's safe to say the market is too long. But this also becomes a target right here. So this is what we're going to be shooting for on any longs, is to take out this low. I mean, this poor high. I think I was saying poor low, but to target this poor high right here. So that's about it for the newsletter tonight. Scenario 2 never came into play. It was all scenario 1 today. I think it played out really good, and really the only level we were concerned about to the upside confirmed that it was an important level, which is what we were looking for. Balance is extremely important, and that's it. So I hope everyone has a good night, and we'll see y'all tomorrow.